Every time Cboe did something that was successful, the question always was, well, what can we do? What else can we do? Where do we go next? So things such as OEX, SPX, and VIX, all these things came from Cboe, never accepting the status quo that we've now done it all. I think we have a lot to be very grateful for, and I believe that Cboe will be looked at for many, many years as the real, I would say, heart and soul of the option business.
The opportunity that it afforded from employees of the Cboe, members down here as market makers, the vision that the founders must have had in dreaming this thing up.
I'm just boggled by the enormity of its success, activity, profitability, and longevity.
You had to keep the members of the Board of Trade in play to fund the thing. You had to get to the SEC, who had no interest. It's like putting an orchestra together, and everybody's in a different union, and you got to somehow get them all together and working together in harmony.
Cboe was the first organized options exchange in the world. It spawned 50 or more option markets. People come to Cboe from all over the world to learn what we do right. There's been no exchange that's been as successful in options in the 40 years. I believe that Cboe helped change the face of finance for the whole world.
For 40 years, the Cboe has been the pioneer for the options industry. The first options exchange, first with index options, and the first with innovative technologies. Here's the story of how the founders created the Cboe 40 years ago and built it into the exchange it is today.
The Chicago Board of Trade was looking for diversification. Their whole business was in agriculture. And there were years when they would do very well, particularly when there was a drought. There were other years where there was not volatility in agriculture prices and it was not so good. One of the things they thought they might do is trade futures on stocks. But the SEC had a different idea. The SEC said you can't trade futures on stocks, but we'll let you trade options on stocks because options on stocks, puts and calls, had already existed in the over-the-counter market.
When the Board of Trade first started pursuing a market in either futures or options on stocks, it didn't have in mind creating a separate exchange.
The SEC sort of jumped in and said, no, that's their options on securities, and therefore the SEC wanted to control it. And at that point, Board of Trade would want nothing with the SEC being in their bailiwick.
Our dealings with the SEC were totally adversarial. At our first meeting with the SEC people around the beginning of 1969, the senior staff guy told us in no uncertain terms that there were absolutely insurmountable obstacles and that we shouldn't waste a nickel on it.
Sullivan and his team surely did face an uphill battle. Yet, despite years of back and forth with the SEC, they moved forward, creating centralized exchange-listed options contracts and a new clearing system led by Wayne Luthrenhausen.
You knew you had to have a stock record, options record. You knew you had to margin those things. You had to take in trades. You had to settle monies. And we just went through step by step each aspect of what we had to do.
It took another full year plus to get all the clearances from both the SEC and the Federal Reserve Board. Went into opening our doors finally after 4.5 years.
On April 26, 1973, Cboe was off the ground with 911 contracts traded.
The trading day went well, and I go off. Sullivan pats me on the back and says, "Make it work tonight, Luthrenhausen." So I go off to make it work that night, and we did, but we took it very slowly. We checked everything before we went to the next program.
I didn't take it for granted that the clearing system would work because it was done on software that had been created almost pro bono for us.
They're having a party. Everybody's at the dinner to celebrate opening day, and Sullivan's over there worried sick because it's taken so long. What could take this long with 911 contracts?
I kept looking around the room. Where's Wayne? Where's Wayne?
When I finally showed up, he was not happy with me for not having found a way to tell him we were just being careful.
When Wayne arrived and said, "The clearing work's all done," I remember I got up on a chair and let a loud cheer.
The Cboe's initial trading floor was a room that the Chicago Board of Trade has used as its smoking lounge. So it was exciting from the standpoint it was the first trading floor I'd been on, but it was sort of This is a trading floor. I mean, people smoked and they ate and they ran around and there's paper everywhere.
Every day, new trading records being set, new relationships being established, relationships in terms of marriages actually formed out of those early days. The staff people weren't so much interested in making a lot of money. It was more the sense that we were contributing, and over the first several years became very knowledgeable about the business that was going to be part of our career.
The membership was very young. The staff was very young because who would take a job there? It's like things going to go out of business. So we had a lot of very bright young people who came to work at the exchange, and a lot of bright young people went to the floor on the exchange. And that combination was quite unique. So that whether it be the people working in systems, oh yeah, you're going to build that, that's a great idea, we can do this, this, and this, rather than someone saying, oh, you don't do things like that.
It was growing so rapidly in the early days that anyone who had a friend who was looking for a job would make a phone call and say, why don't you come down to the Cboe on LaSalle Street and take a look at it. And we accumulated people from various neighborhoods of the city of Chicago. It became like a fraternity with these friends, and it was a good thing because the early days, the challenge was great. You were doing something different every day.
There were a handful of people who had prior positions in the business, but that was a pretty small group of people. Most of the people that I worked with and worked on the trading floor were people that came right out of college, in some cases right out of high school.
The timing for the Cboe's launch could not have been better, as it coincided with the publication of a little-known mathematical formula, the Black-Scholes pricing model, which turned out to be the cornerstone of the options market.
It was the creation of Cboe. It was the creation of the Texas Instruments handheld calculator and the creation of Black-Scholes. And it was the early Cboe floor traders who grasped onto this and figured out ways to really value prices of options.
A lot of the people that were using theoretical type stuff adopted the Black-Scholes as a way of figuring out what the price ought to be and what the risk in terms of deltas ought to be.
In the very earliest days of Cboe, no one really knew what an option was worth. It was just merely supply and demand, but it wasn't based on any mathematical calculation.
There's no question that without the Black-Scholes model, we wouldn't be sitting here. It is clearly the most significant formula developed in economics, certainly in my lifetime and probably even further.
The Cboe gained volume, traders, and respect. It also earned a new trading floor at the CBOT, opened on December 2nd, 1974, 18 months after launching.
All of a sudden, every other stock exchange in the country wanted to get in on it.
The American Stock Exchange had noticed Cboe and found it not only intriguing, but a threat to their own business. And they were noticing that if someone who would buy a $3 Canadian mining stock found that they could buy a $3 call option on IBM, they would understand what IBM does a lot better than the Canadian mining stock.
The Board of Trade agreed to let its wonderful, historic, monumental 7-story high trading floor be double-decked without ever occasioning a moment's halt of trading on the floor.
Just over 3 years after the Cboe was launched, regulators allowed the trading on the other side of the coin, puts. No doubt, puts helped boost fast-growing volumes at Cboe. Less than a year after put options, Cboe hit record daily volumes in 1978 and were headed to nearly 500,000 contracts in a day.
By adding the put, it was exponential, the way it would allow me to now hedge my risk, which means I can make better markets because I have that vehicle.
But puts were also part of a compromise that led to the creation of the Options Clearing Corporation, a move that would transform the options industry.
We fought through the issues that had to be addressed about what are we going to force Cboe to do to let them now trade puts, and then what are we going to force the Amex to do, okay, in order for them to get into the business. You create a common clearing corporation, or you built an interfacing clearing system. Cboe, you can have your clearinghouse, but the members are going to control where they clear. My pitch was to take the common clearing one, simply because we were dealing with a real New York community versus a Chicago community in that era. And the consequence of letting interfacing clearing corps, all of the clearing business would have migrated over time.
10 years after creating the first options exchange, Cboe was responsible for another industry first, creating its own Options Exchange Index, or OEX. That product, later called the S&P 100, also led to a partnership with Standard & Poor's to list the S&P 500. Both indices would once again transform the industry from just single-name options and open it up to a whole new category of investors.
The OEX was a huge hit immediately. It was obviously a product whose time had come and the demand was there for it. I don't know how many times we revamped the OEX pit to accommodate greater and greater numbers of people. I think there were 500 or 600 people in that pit during the heyday.
After we had made the OEX successful, then we went and approached S&P to list the 500. Part of the negotiations was that we would name the OEX as the S&P 100, and we would get the 500.
SPX was, interestingly, not very successful. It was not successful at all the first time we launched it. We looked at the construct of the product and revamped it a bit and turned it from an American exercise into a European exercise product. Very shortly thereafter, that product exploded, and ultimately the SPX overshadowed the OEX even.
In many respects, those were the products that led to the indexation of the market. So whereas today we have ETFs and options on ETFs, which are a significant part of the trading volume in both the equities business and the options business, OEX and SPX options were really the pioneer of the index products.
The 1980s would be a decade to remember. The new Cboe building allowed the exchange to stretch out in its 45,000 square foot trading floor.
By the late 70s and early 80s, the space had become very cramped and was limiting the ability of the exchange to add new product.
The site, in fact, was owned by two railroads. The two railroads had been longtime competitors and were reputed to not have spoken to one another in 100 years. But they each held a 50% undivided interest in the property. The real estate world looked at it and said, this is a deal that can never happen. An extremely complicated process, which before it could happen had to be approved by the board of the Penn Central, the trustee of the Rock Island bankruptcy, the U.S. District Court, the Illinois Commerce Commission, the bondholders of the Rock Island. So that all eventually came together. We built the building. The concept of the building was that it would be a trading factory. The trading floor itself was the focus of everything. So we met with a lot of members, to get their input on what would work. We traveled to Bell Labs to see what the latest technology was.
The move to the new facility was hugely important. It allowed for the growth of the business. It accommodated the growth of the business. We had room to expand, which we sorely needed.
In 1985, Cboe's Technology Committee pushed ahead with another industry innovation, RAISE, the Retail Automated Execution System.
The customers were calling for some level of certainty in terms of being able to hit the quotes that brokers could pull up and see in terms of what particular OEX strike prices were being offered for.
To relieve this problem, we decided to automate it. Whatever the market was at the time, we would fill that order.
As customer orders came in, the wheel turned, and the people that were on the wheel, were assigned to trades.
The exchange was looking for ways to show people this is a fair place. We're not messing around with your order. We don't know what you're doing. We don't have inside information. All we're trying to do is make a fair, orderly market. And if you think I'm screwing around, just hit the button and take it.
The Cboe also founded the first option education program, the Options Institute.
It gave the product, I'm going to say, more credibility. I mean, a lot of people looked at trading options as being crazy and, gambling and so on. The idea in educating the public was that there were real uses on a conservative basis for using options.
There were many times where our business got very bad, and the question is, do we eliminate the Option Institute? And we always said that our future is education, and if we keep doing the right things, right for investors, it will inure to our benefit over time.
But the biggest challenge for the exchange was managing one of the most monumental events in market history.
The 87 crash, I remember like it was yesterday, literally.
I know that personally I didn't get a lot of sleep that week, maybe a couple of 3 hours a night.
Down about 508 points, I believe.
Things ground to a halt on the New York Stock Exchange. There were several brokerage firms that were selling the strategy. You could just sell puts and collect the premiums and never have to worry about any downside risk. Well, when 87 happened, everybody realized that there was an awful lot of downside risk.
Following the 87 market crash, there was a lot of investor pullback, so we invested a lot more time and effort into the promotion of our products through education, helping people understand the proper positions to have on to combat market volatility and protect themselves in the event that there were those kinds of market corrections. And we think in the long run that helped to grow our business.
Cboe weathered several tough years after the crash, but found its stride again with new products that addressed the simple question of what does the market need now?
Key to driving product development at Cboe is filling an investor's need, filling that gap. What's missing? What product is missing? What concept is missing? What risk is unhedged? Leaps is a terrific example of Cboe developing and filling a gap from an investor's needs. Flex, for the first time, gave investors the ability to customize the terms of an option contract. Flex is an interesting story in and of itself.
Duke Chapman, Blair Hull, John Stafford, and I were playing golf at the Glenview Club, talking about the structured market and the OTC market and how we get into that market. Over the course of an hour and a half or so, sitting there, we brainstormed it and kind of drew it out on a napkin and came away thinking that we had something. We gave customers the flexibility to create something that was to their specs, and it was we definitely made inroads. It was a great innovation.
I'm often asked how best to describe VIX, or the concept of volatility, to the investing public. We understand pulse, our own pulse. We understand our own blood pressure. If you can think of the market in times of stress with a rising blood pressure or pulse is increasing and elevated, it's the heartbeat or the pulse of the market.
At the same time, Cboe rolled out its next trading innovation, handheld computers. It marked a major leap in exchange technology, making execution faster and allowed market makers to monitor their risk in almost real time.
If I'm having difficulty figuring out where I am, and I can't tell you how many times in the early years I would run off the floor, take a piece of paper and try and figure out where am I, and then run back on the floor and go, oh God, I'm this. And if you don't know where you are, you're going to be very hesitant to make a market. So we wanted to find a way to provide a market maker with an instrument in which all this information, all of his trades, the long 20, the short 32, the long 42 of this, go into. And once it goes into it, it is programmed with Black-Scholes or any number of various things. And it will literally tell you at any point in time, you're long 233 deltas and you're short 25 Vega. This was an enormous advancement because now as a trader, I sell 20 to this, I buy 20 of these, I do this, do this. Where am I? It's right here.
Handhelds were just one step for Cboe's technology team. With the growth of electronic trading, Cboe faced one of the biggest internal and outside challenges in its history.
We were faced for the first time with an all-electronic competitor in the space. Cboe had a number of choices. We can ignore that new electronic competitor. We can totally embrace our screen-based trading alternative. Or, as it turned out, we embraced merging those two concepts.
The floor and the members on the floor feared automation because they were afraid they'd be intermediated. They were also concerned whether automation would allow for the kind of liquidity for orders, and particularly complex orders that were common in the option business. The members voted for it, but there was a condition. And the condition was you can't turn it on without another vote. And we knew that would be a problem. But ISE started, and they were starting to eat into our business. But the members didn't feel that threatened, and with every passing month, they were eating into more of our business. So as much as we wanted to turn it on, they wouldn't, as I would tell people, I had a Ferrari in the garage, they wouldn't let me give me the keys. So what we did is we had a political compromise.
Add back into the marketplace or keep in the marketplace the benefits of open outcry trading and surround that experience for the customer with technology. And that's ultimately what we did with hybrid.
With Cboe's hybrid striking the right balance between floor and screen, volumes continued to boom. Cboe was able to stay ahead of rival exchanges, and now could turn its attention to the next big thing, futures and options on the Cboe Volatility Index.
For the better part of 10 years, VIX was merely a number.
At some point internally, traders began saying, this is nice having an index out there, and it's nice that it's quoted on TV all the time, but what we'd really like around here is the ability to trade that index.
We worked on it for 5 years before we launched, and one of the things we decided was that you needed to have a future as the underlying to the option.
Key to a tradable VIX is the settlement process and having a vibrant underlying market to settle a futures contract. So Cboe really wanted to control that process and decided the best way to ensure a reliable settlement is to control our futures exchange. We had to build one.
We have the world trading a number because the number is really useful because members, a group of people said, you know, if we take the Black-Scholes formula and run it backwards, we can create a number that people can use that can hedge their economic exposure to the stock market. Now that's really inventive.
Well, as a product, there's no question that it is, from a brand and name recognition standpoint, as well known, if not more so, than Cboe itself. Certainly if you're a follower of CNBC or the financial press in general, it is mentioned in nearly every market assessment of what the daily activity has been and what market volatility has occurred that day.
While the VIX became one of the most successful new contracts in decades, Cboe turned its attention to the next big challenge, taking the Cboe public. It wasn't going to be easy.
One of the most vexing problems that I faced when I came to the Cboe was dealing with the heritage of the Cboe, that it was formed by the Board of Trade. And although there was brilliant work done in creating a listed option market, there was baggage, because when the Board of Trade funded the whole creation of the Cboe, in those days there was no public ownership. There was no way to directly benefit from the success of the Cboe. So what the founders of the Cboe did was they said to every Board of Trade member, you have a perpetual right to come to the Cboe and trade. So even though it wasn't a membership, it was a right to trade. It became very obvious that as exchanges were going public, that the Cboe could never go public without resolving the exercise right. I even went to the Board of Trade and said, let's merge and put Humpty Dumpty back together. That didn't work. The Board of Trade sued us, and it ended up in a litigation process of about 5 years. Very painful, very costly, and we stood by watching every other exchange in the country go public, and we couldn't do it. Right before the case went to trial in Delaware, we struck a settlement with the Board of Trade, which made many of our Cboe-only members very unhappy because they didn't want to give away any equity in the IPO. So what we did is we created a blend of equity and cash because the current members were more willing to give up the cash than the equity. From a management point of view and a governance point of view, it was an impossible situation for us to operate against for-profit exchanges when we were still dealing with a membership environment where they could have a vote on almost any issue. So I viewed it not as an IPO to raise capital, which is why most people have IPOs, but rather to restructure ourselves from a governance point of view.
Being able to effect a successful IPO in June of 2010 was no small feat. And really at the heart of it was the terrific story we were able to tell about Cboe, its growth prospects, investing in Cboe, our volume trajectory, our new product development, the innovation, and our systems, all rolled up into one day. And that IPO and that bell, for us, told the story when it was a success.
As a public company, Cboe has continued on the path Joe Sullivan and his team embarked on 40 years ago. It's been quite a journey.
I've been married to the Cboe longer than I've been married to my wife of 33 years. The people who have been here for a good part of our lives are very proud of what has been accomplished here at Cboe.
I couldn't possibly have imagined that it could grow into this sort of thing, that the reach of Cboe would go beyond the former smoking room at the Chicago Board of Trade, and really reach around the world.
If you look at the number of derivative and options exchanges worldwide, I mean, there can be no other tribute to Cboe other than that.
Cboe is one of those things that really kind of changed the world. Think about that. I mean, when we opened, the average monthly volume in the over-the-counter options market was like 9,000 contracts a month.
We are blessed by having wonderful continuity of people who've been here literally for decades, who believe in Cboe. We are in a community in Chicago, which is unique to the whole world.
Well, we've had an incredible 4-decade run, telling our story, innovation, product development, volume. It's an exciting time for Cboe. We've just begun.